Sometimes life is wonderful, and sometimes it's not. Cherish the good, but always be prepared for life's challenges. At Private Healthcare, we provide the peace of mind you deserve. With private healthcare, you'll get the coverage you want and healthcare you need. If your employer doesn't supply healthcare coverage and you don't qualify for Medicare or Medicaid, you need to give us a call right now. Private healthcare is private health insurance for ages 65 and under with medical, dental, vision, and even prescription coverage. When life comes at you unexpectedly, you need to be ready, and health insurance is your financial safety net. Health insurance has never been so easy and affordable. If you're looking for health coverage at the best price and your annual household income is $35,000 or more, give us a call at 800-733-6860. 800-733-6860.
Welcome to the Turnpike Sports Spotlight. Dave Weishuttle with you. Taxes are always a complicated issue. They even get more complicated when you're talking about taxes regarding gambling. It's never easy for gamblers when dealing with taxes, and it just got a whole lot more difficult with the passage of the so-called Big Beautiful Bill. And luckily, we have a returning guest that's going to clear a lot of things up. He is accountant Miklos Ringbauer, who is founder of the accounting firm MiklosCPA out of Los Angeles, and he's on the line with us right now. Miklos, thank you for joining us again.
Thank you for having me back.
I'm so glad you're coming on and to answer a lot of questions, because there has been a lot of press about the Big Beautiful Bill. And I can tell you, I talked to a lot of gamblers. I talked to a lot of people who work in the casinos, and they are not calling it the Big Beautiful Bill. They have another name for it that I can't say on the radio. The gambling aspect of it seemed to come out of nowhere. And in fact, some Republican lawmakers, after they signed the bill, became aware of this part of the legislation. I'm curious, before we get into the specifics of what gamblers need to know about the new legislation, was the accounting world aware that something like this was in the legislation? Because like I said, a lot of people I talked to found out about this after everything was signed, sealed, and delivered. I mean, did the accounting world have some inkling of what was going to happen in this legislation?
So it's very interesting because on the House version, there was nothing about regards to a 90% only deduction option. This all came about on the Senate side. According to the spokesperson for the committee, Amanda Criftschild indicated that during the budget process, Republicans had to pass the bill under the Bride rules in order to use the reconciliation option. As a result, they had to make the bill neutral. During that process, they indicated that they would have to raise some funds to make it as a neutral and meet the requirements. And during that process, they introduced this haircut that some of us are looking at and maybe generating a phantom income throughout these next couple of years if there's no corrective action taken place with the legislator.
Well, let's get into the legislation and what it says. And probably, I guess, we're going to be talking about a particular section of the Big Beautiful Bill, and that's Section 70114. When it comes to income tax on gambling and gambling deductions, what are the major changes that gamblers should know about that will be coming down the road as a result of the passage of the bill?
So as of January 1, 2026, the whole industry will change, both for professional players as well as casual gamblers. The Joint Committee of Taxation is estimating only a $1.1 billion over 10 years revenue generation from this activity. However, this will completely can and most likely will change the landscape for everybody, not only the casino owners and the establishments, but also for the players, domestic and international perspective-wise. Let's talk about the activity, what happens, and what I mentioned about the phantom income. Phantom income is considered income that you have to declare as taxable, and you will pay taxes on it even though you did not receive it. And this change to the Big Beautiful Bill has introduced that exact factor to everybody who will play.
Okay, I'm going to play devil's advocate here. I mean, the law says that starting in January, gamblers will not be able to deduct 100% of their losses from their income tax, but will only be able to deduct 90%. And again, I'm playing devil's advocate here when I say, yeah, it's only a 10% difference. Will that make a difference with regard to income tax and deductions? What would be your response to my statement? And again, I'm playing devil's advocate because I think it's a huge deal.
It is a huge deal, and this will impact everybody in the sense that let's talk about the professional players first. They are in business of making the gambling, or whether they are poker players or any kind of other professional bettors, they will have realized taxable income subject to FICA taxes, Social Security, Medicare taxes on the losses that they are unable to declare. So let's use your example. Somebody who's playing $2 million throughout the whole year, winning and losing. Mm-hmm. At the end of the day, they would come out with zero income, assume that they lost the exact amount of money that they have won. They will have a $200,000 taxable income as a result, which is also subject to self-employment taxes. Mm. This will result in a $30,000+ worth of FICA taxes plus regular ordinary income taxes on the federal level. So if you are single or if you're married filing jointly, depending on your tax bracket and other sources of income, this could add tens of thousands of real tax dollars that you will be subject to, which will make you decide whether do you participate in a tournament, do you attend certain events, because now you will be subject to any income that you may have not even walked away with.
I'm so glad you broke it down like that, because I can tell you, talking to a lot of people over the last couple of weeks, there's a lot of fear in the gambling world about taxes that would have to be paid. And quite frankly, I've heard from so many professional gamblers, this is the most I've ever heard professional gamblers talk about taxes. There's one guy, Captain Jack Andrews, a very famous sports bettor. He gave out the information like who's ever a professional sports bettor, the law could result in players losing money but still owing taxes on income they didn't make. I mean, I know one of the examples that all the gamblers are using, that under this new law, there is a mathematical probability that if a gambler won $100,000 and lost $100,000 in the same year, they could be taxed as if they made $10,000, which they actually did not make. I mean, is that example that's really floating around the sports betting world? That's a real possibility when we're looking at this new law, is it not?
It is 100% accurate. And even the most scarier part of it will be whether states will adopt the big, beautiful bill provision, because some states fully conform. We might end up fully conforming to. Some states may not going to conform. So depending on where you live, you might get double tax, meaning one on the federal level on your phantom income, and then also on the state level if your state end up conforming to that rule. So it's going to be very, very interesting how this phantom income, as you described in your example also, will impact personal behaviors, and whether do you consider practicing, improving your skill set, if you are talking about a professional player side, that you will make real life-changing differences, or whether you will be participating. And where it also will matter that it will impact our domestic activities for all the different areas where we have these games and tournaments. But remember, a U.S. taxpayer is subject to a worldwide income. So even if you go offshore and play, technically that income will be the same exact subject to a 10% limitation. So this is going to alter how people will want to participate and be in a profession.
Because of this new legislation, are there new tax forms that a gambler has to know about? Are there new filing procedures that gamblers should be aware of under this new tax law?
Not yet. So forms for 2026 have not been available. Our best estimate is that when you declare that you are a professional player, and by the way, this is only unique for the gambling industry side. If, as an accountant, I make $100,000, but my operating expenses are $100,000, I come out with zero income, zero taxable income. In this scenario, there may be some kind of limitations based on the classification of the person, and then that $10,000 will kick in as a limit. We don't know as of yet whether it will show up on your Schedule C activity side or it will be a throwback on your 1040 side. Those are a little bit too soon to discuss, but we have to stay tuned because there has to be a mechanism to recognize that this industry, these people who are performing a business activity will no longer have that 10% deduction. You as an individual taxpayer will be responsible to properly maintain your records, same way as you have in the past. However, this will result in an even more detailed and ensuring that we track every single activity much more scrupulously than in the past.
I'm so glad you mentioned that because that was my next question. I mean, every time you're on here, you give out such great information for gamblers to know about with regard to their taxes. And every time you're on, we stress how important good record keeping is. How much more important does record keeping come into play, especially under this new law? I mean, good record keeping always helps on what deductions you can take for your income tax. Now more than ever, because of this new law, is good record keeping absolutely essential?
Absolutely. So historically, the IRS required all gambling winnings to be reported as taxable income, regardless the source, whether it was casino, sports betting, lotteries, fantasy sports, and so forth. One of the unique challenges the industry is facing is on the expense side. Casinos do not track everybody else's activity. So you as an individual player will be responsible to maintain a proper log, accounting from all the different areas because there's no aggregated systems and there's not even an aggregated software for sports professionals. Maybe somebody will write and create a software where it will help you to aggregate all your personal activities. But other than general accounting software or maintaining a general ledger for your own activities, there's no universal accounting for your activities unless you set something and maintain something. Or your accountant is helping you with that.
Well, I'm glad you brought that up because when we talk about good record keeping, what are we talking about? Are we talking about transportation expenses, food, lodging, wins, losses? I mean, basically, when we tell gamblers keep good records, what are we telling them to record? And as an accountant, what do you want to see from a gambler with regard to their records?
So I need to break this part up between casual players versus professional players. A casual player has different deductibilities, usually what the wagerings are associated with the activity. So if we played lottos, casinos, racehorse, or any of those activities, you will maintain every single of your bet. Now, on that level, hopefully, if you sign up for the casinos or the establishments' tracking system, internal tracking system for their own player purposes, you can summarize all your winnings, all your losses. But if you play at 15 different establishments, you need to make sure that you have a good record keeping on those. And you potentially want to sign up for those casino membership cards and so forth. So you have an annualized record for yourself. That's usually what the casual gamblers will be able to deduct, offset against their income or their winnings throughout the whole year. But as a casual player, you itemize it on your Schedule A purposes. That's where also the big difference kicks in, that you're reporting your income on a 1040 side, but you're deducting your expenses, associated expenses on your Schedule A, and you also will generate a taxable income as a result. Because if you don't itemize, you don't have the ability to itemize, and your losses are below the standard deduction, you will have all of that as a gambling income will become a taxable income for you. So that is also a very interesting outcome of the itemized deduction versus non-itemized deductions that many taxpayers face with the increased standard deductions that the OBA has created. Now, when it comes to professional players, you're attending the tournament, signing up, associated activities, flying, just like any other businesses, those are related to generating of the income. You would record those as part of your Schedule A activities under your lodging expenses, under your tournament fees and so forth. So you maintain a very different records. Many of the players that I have came across, especially the ones who just start out to be a professional player, they commingle. They use their personal credit card to buy the plane ticket and flying to the tournament site. Now you want to properly segregate your activities, because the more activities are in different systems or different platforms that you have paid for, the harder it will become a trackable activity. So it will be more costly for you time and financially to maintain those records. Now, what are the records to maintain? Your plane ticket copies. Hopefully you have it as a digital copy and in an email. When you bought supplies or when you bought a laptop, right? Those receipts, you have the credit card receipts, but you also want to maintain those original receipts. Your local taxi and transportations, chartered going to the venue. Those are all receipts that you get. Now you want to maintain, you want to run it as a much more tied down business operation wise. Dedicated email, dedicated cards, dedicated bank accounts. You want to have those things. So that way, if and when there's an audit, you have an easy way to provide the substantiation. And the magic word is substantiate. When we all file the returns, right, we declare what our income was. We will declare what our expenses are. But when a state or a federal tax agency comes and says, please prove us the expenses in the travel expense bucket, or in your paying commissions to whoever you had to pay commissions to be participant, or trainings, because some of us, may end up paying consultants to improve our game. Those records we need to be able to provide: how we paid, how much we paid, when we paid it, because remember, most of us will be cash basis. So what we paid from January 1st until December 31st, we have to record those and maintain it 3 to 4, 5 years, depending on the type of a cost that we are declaring against our income.
When it comes to gambling and record keeping, especially if they're professional gamblers or they gamble a lot or make a lot of money and lose a lot of money gambling, how often should they contact their accountant? I mean, would you like to see their records every couple of months? Would you like to talk to your clients a couple times a year? If someone gambles for a living or wins and loses a substantial amount of money through gambling, how often should they be in contact with their accountant in order to properly follow the requirements of this new law?
If your accountant is not the one who does your continuous day-to-day accounting, the bookkeeping, then it is, because we are now talking about very serious tournament monies in and out, winning wise. You want to do at least a quarterly, because the estimated taxes with this phantom income, not making the payment, assume that there is no change to tax legislation. There's no corrective action. The quarterly underpayment estimates can be severe additional penalty that you will have to pay with the associated income tax and self-employment taxes that you may have not properly remitted. There could be thousands of dollars of underpayment penalties associated with it by not making the proper quarterly estimated payments. But some good news, there is a couple of tax legislations, the Fair Accounting for Income Recognized for Sports Betting and Taxation, the Fair Bet. There are some legislations that's in the process that people in the legislation are trying to implement. However, those are currently stalled. So this would be a perfect reason to call your representatives and help them to remove any blockage that the industry is facing and correct this error that we understand had to be under the bride rules in order to pass the OBA. But the unintended consequences of tax legislations are coming to light.
I asked you this one time last year, and I'm curious, in light of this new legislation, if your answer is going to change. Is there a particular type of business entity that a person should form that would be more beneficial for them under this new legislation? I mean, if a person was taxed as an individual versus a corporation or as an LLP or LLC, I mean, basically what I'm asking is, would Dave Weishottle LLC be able to take more deductions than Dave Weishottle individual gambler be able to? I mean, Would it be better for a person to be a corporation in order to take more deductions under this new legislation?
So you first have to look at your state rules
Okay.
because certain states have restrictions of what type of entity a person can operate based on that business activity. So once you clear that hurdle with your lawyer, because that's not an accounting matter, but a legal matter,
Oh,
the next
you're
part
putting more
is
pressure on me now. I was trying to push it off on you.
welcome to the world of more complex
Yeah, right.
taxation. We all believe that every time when tax legislation gets passed, it becomes simpler, but in fact, it becomes more complex. The big question becomes whether you can be an S corporation or a single member LLC is what you run. If you are running as a single member LLC versus a Schedule C, they are taxed exactly the same way. So there would be no tax differentiation between being an LLC as a single member LLC versus Schedule C unincorporated activity-wise. However, this is where you may want to start looking at whether do you want to be an S corporation? Is it an option to be in a corporation structure? And then have that discussion with the accountant because corporations have to pay, of course, reasonable officer compensation.
Mm-hmm.
And that will be the big discussion on an annual or year or a quarterly basis. What is a reasonable compensation for that entity? How much money it is making? Are you winning or are you losing? So for the year, and that will impact your owner officer comp structure as a result. So, but remember, if you do create an entity, that also creates an additional layer of reporting and tax complexities to yourself, meaning you have to pay potentially an additional tax return. You may have to run payroll taxes on top of it. So you have to evaluate whether it is the associated cost gives you enough benefit to take the ability to do deduction wise, however, remains the same because whether you are a corporation or a self-employed individual, the 90% deduction versus 100% deduction will still remain the same. So you may not get too much further ahead except the self-employment tax piece. But that is where you would want to do a tax planning with your accountant and really dig deep in how much self-employment taxes would you be subject to as a result of the 90% deductibility of your expenses for the year. But before you run and start incorporating, we may want to see whether is it worth to incorporate in, and because there may be corrective legislative actions will take place before year end.
Mm-hmm.
And the reappeal effort will not be stalled, and then all of that additional steps will not be needed. But do go and talk to your accountant right now, to your trusted financial advisors, to see what it would do to you using your 2025 numbers or your 2024 numbers if there's no change to legislation, so you can properly plan. Because going forward now, you must plan.
Well, let me ask you about that. As you said, politicians on both sides of the aisle have said they want to roll this back, this section on the big, beautiful bill. I know Ted Cruz of Texas and Bill Hagerty of Tennessee, both Republicans, have signed on to the legislation to roll this back. Both senators from Nevada, Jackie Rosen and Catherine Cortez Masto, are really pushing to have these provisions rolled back as well. I think Masto said this bill will do irreparable harm to our nation's gambling industry if it takes effect. As an accountant, have you been hearing that changes to this part of the big, beautiful bill could possibly be rolled back, or is that just a long shot and what is said in the legislation will probably take effect?
It depends on what the legislators' priorities will be. Remember, we as a constituents have a voice. We have to call in to our legislation because the more time we call in, and especially those legislators who have not supported the reappeal efforts, is where you can make your voice as a local resident and help not only your industry, but also your fellow players to make sure that we are all playing a level field, we have a level playing field for all of us. Because not only the U.S. taxpayers are impacted, but anybody who comes to the U.S., to Vegas or Atlantic City from a foreign country will be subject to the same rules as we are. So they may end up taking their dollars away to a different tournament in a different country.
So give us a recap of what gamblers need to do in order to prepare to pay the income tax under this new legislation. I mean, what are the tax forms they need to know about, and what kind of information do they need to present on these forms in order to report their income and their deductions in the appropriate way under this new law?
So if no change happens, first and foremost, must talk to your accountant or have some other means to evaluate what your financial impact would be. Once you have done that, start looking at how many different ways, how many different places you play at, how you are spending your expenses, how many cards, how many different bank accounts these transactions come into or going out of. Simplification will be a key. So that's the very first steps that you can complete without paying any major funds out of your pocket to be able to in compliance. Because the less complex your activities are, the easier it is to track and the easier it is to understand what my tax obligation will be if the 90% and not 100% deduction is going to be available for you. Once that is done, we need to look at what the tax forms will be. 2026 tax form, as I said, is not yet out. Probably middle of next year is when those things will become available and additional guidance from the IRS or the Treasury will be available if legislation does not make any change. But remember, legislators have an incredible power to retroactively correct things. Look at the OBA rules. Some tax legislations, not on the gambling side, but on other areas, went back to January 1st, 2025. So even in 2026, we still have a hope that they will be able to retroactively adjust and correct this 90% deduction ability versus 100% deduction. So be prepared, understand what the legislators are doing, express your voice to make sure that it benefits all of us who are in the industry and help us to avoid any unintended consequences that we all face. But record keeping will be crucial because how you will determine what your 90% deduction versus your 100% deduction is only going to come about by maintaining meticulous, detailed activity, recording and recognizing all receipts that you pay for. Having more receipts is never going to hurt you. Have your professional accountant help you determine whether it is a deductible expense towards your activity or not. Do plan and seek guidance on what are my deductions that I can take. Go through a real life scenario so that way your accountant, especially if you are not using one right now, but that accountant can provide you a proper tax guidance and planning of how you maintain your records, what expenses will be deductible. Because remember, this is a trade or business. And for a trade or business, your expenses must be reasonable and necessary for your activities.
Miklos, we're running out of time, but if people want to reach out to you, how do they get in contact with you? And do you have a website for your accounting firm, MiklosCPA?
Yes, we do have a website, MiklosCPA.com, and also you are certainly welcome to give us a call at 213-283-9002. Happy to help any of your listeners to navigate through this major change and unexpected change that we are all facing in the industry.
Miklos Ringbauer, founder of MiklosCPA, thank you so much for coming on and talking about taxes and what gamblers need to know about with regard to the big, beautiful bill. It's a fascinating area, and I can't wait to see the developments that will happen with regard to this issue. I always say that people should consult a professional when it comes to their taxes, especially when it comes to something as new and complex like taxes and gambling. Thanks so much for coming on and giving us some really great information.
Thank you for having me.
That'll do it for us this week. We'll see you next time on the Turnpike.